What is up, everybody? So this is going to be an interview with Frozen. It's not really an interview. It's more so we're going to sit here and bullshit with each other. He came up with a list of topics, so he's going to kind of take lead on this. It'll be interesting. It's going to be about Edge, really. Ooh, I don't even have me up. Hi. There we go. Ooh, shit. And I'm hitting the camera. But anyways, Frozen, what's up? It's been a while since you've been on the channel, but I talk to you every day almost.
Good to be here with you again. It's definitely going to be less of an interview, more of a fireside chat, because it is snowing up here in northern Wisconsin, and I think you just said that you were in shorts and a t-shirt.
Yeah, I think it's like 80 or something.
So we're going to put a log on the fire here and talk about some parts about Edge. Made a video called How I Found Edge and put like a flow chart through there, and I got a couple follow-up questions which I think are really valid.
I definitely recommend people to check out that video. I'll link it in the description. It's a really good one. And just I want to kind of do a summary here because when I first met you, you didn't have Edge, you weren't profitable at all, and now you've been consistent for how long, would you say?
Over a year now.
It's been a year?
It's been over a year now.
Shit, time flies, man. But you kind of came out of it quicker than normal people. Would you say that? I mean, not to go off topic or anything, but I mean, would you say that
Yes and no, because I had put in.
Would you say the experience? Having experience, did that help you kind of come?
Absolutely.
Okay.
Absolutely. Having had Edge before and then having it go away, having been in various parts of the industry, having those edges go away over time, having failed so many times. I don't even know if failure is the right word, but having my face bashed in on the curb so many times, it's something new traders just can't appreciate until it happens to you. So I never blew out any account. So risk management has always been a really big thing for me. But despite that, just knowing what that kind of pain feels like, I think that helped me accelerate finding Edge, because I knew already some of the things I didn't want. And I had already tried a lot of what other people said was working, or what they said to do, what the online courses and the gurus say to do, and what all the trading books say to do, which is, take all these indicators and slap them on a chart and watch the stochastics go. I think even one of the first videos I watched of you over a year ago, this was a while back, I think you had taken like a stochastics or an RSI or something and slapped it on a chart in real time, and you were showing people how it only works in hindsight. Do you remember making that video? Maybe you can dig back and find it.
I was at one point using stochastics, so that did happen, and I think I remember that period of my trading.
This video that I'm talking about, you were showing people why it's not really good during the moment, or not as powerful.
I think you're talking about the Delta potentially, because I did do a video on the Delta and how, I mean, that was the one indicator video I know I did where it was like, okay, this is kind of bullshit.
Maybe it was that. Okay. I don't remember. It was over a year ago, but yeah, indicators look really good in hindsight. So when you see someone say, "Oh, I made," I love the flash words that are used on these YouTube video thumbnails. Like, "I made easy money today. So easy. Everything's easy." Well, nothing in trading is actually easy, and I challenge those who say that it is to go ahead and post up their live broker statements. I'll wait.
Let me ask you this. Can you define what indicators are? Would you say a volume profile or a footprint is an indicator? Because in reality, those indicate you to get into a trade, or would you say that?
Yeah, I think you can argue semantics on that. Sure, everything is an indicator. You could just say volume is an indicator. Even the price chart, the candles are an indicator, right? Because they're indicating something to you. Yeah. You can argue those semantics. That's not really what I'm talking about. So if you want to get to the root of what I'm referring to, it is those
Squiggly
studies that
lines.
right, it's the studies that are built off of price action, typically lagging. So things like moving averages, stochastics, RSI. Now, don't get me wrong, people make a living off of them, but they don't use them for every single trading decision. It's not like they're just staring at the moving averages crossing over and saying, oh, but here's the spot. That's not how that works. They're really more just thermometers for temperature checks. But, um, you know, when you start, you see people selling their indicators. Some people sell some kind of special code that has a magic line that is on a chart, and you know they try to sell that, and that's the secret sauce to everything. Well, it's not a secret sauce. It's probably just another type of moving average, just to burst your bubble.
And
So
it
after
is
you try all
lagging.
those,
It
yep,
really is lagging. I would definitely want to agree with you on that, and a lot of people know that it's lagging. But what I think those indicators are doing is it's taking order flow essentially, and it's neutering it. It's taking it and smashing it up into some line, and then that I don't know. I sound like an
yeah.
idiot.
I mean, we could do a
Yeah,
whole
yeah.
fireside chat episode too on just bashing on indicators, but that's beside the point for today. What today I wanted to discuss with you was, so after you've tried all those things as a new trader and none of them work for you and you can't find edge off of them, where do you go? And I kind of made a flow chart in that how I found edge video saying,
I
okay,
got
well,
it
you got to
pulled up.
find,
By the way, I pulled it
okay,
up.
okay, great. You gotta find a pattern and study it, and the pattern doesn't necessarily have to be a chart candlestick pattern, which, by the way, I misspelled here on this
And just
diagram that you're probably showing up.
in case people can't see, it says start, tried what others did. This is your path, correct?
Yeah, this is
Okay.
how I found edge.
Tried
Yep,
what others did, indicators, candlestick pattern, studying pattern, I recognize, and
I
that's what you want
recognize.
to talk about today.
That's what I want to talk about
Okay.
today. Yeah, and I think for folks who are struggling or maybe even less than 5 years in, to 1, 2, 3 years in and still struggling, I think the first thing that you have to consider is what kind of time frame you really want to be involved in. So, are you going to be a full-time trader? Are you going to be a part-time trader? Because that's gonna affect what kind of hold times you're going to try to have. Do you have a full-time job like I do? Are you able to sit there all day long and focus on multiple security types, multiple names, or are you just going to stare? You want to just stare at one? Do you even want to sit there all day? Do you want to just trade the ES on the first 30 minutes and then be done with your day? I only trade stocks for the first 30 minutes and then I go off to a full-time job, and that's it. Sitting for a full day and focusing is extremely difficult. Fat Cat, you can speak to that. Staying focused for that long on something like the ES, it's just, especially on such a small time frame, it takes a lot of energy, brain power to sit there and to stay in shape mentally to be able to do that all day in and day out. It's really hard. So I think you have to grab your natural gut feeling for what length of time is right for you. It's going to be different for everybody. If you feel like your hold times need to be very short, if you feel like you need to be in and out, listen to that. If you feel like you need to not be sitting in front of the computer and you can let trades sit overnight and you think that you might be more on the swing side of things and you can do overnight positions, listen to that. Don't ignore that. Don't ignore what your inside is telling you. That is a natural feeling for what time frame and hold time is correct for you. I think that's really important to identify. Do you have any thoughts on that?
I mean, yeah, well, as a scalper, there's a lot of misconception with that. So, I mean, yeah, mentally it is fatiguing. I want to say that for several years I went through an identity crisis, and it's
Mm,
as of recent that I've kind of came out of that. Because
mm,
you did mention, what do you want to do? I think it's important you find what you're good at, but you do need to sample other things. I really want to be a bigger picture trader where I hold these big moves, but honestly, I'm just a better scalper,
mm.
and that's where the money is. So might as well keep doing that.
Do
Um,
you think you could? Do you think you could sit all day long and scalp every day
hell
of the week?
no, man. No,
Why not?
no. it's mentally fatiguing. So like
Mm-hmm.
when it comes to scalping, I'm watching every single fucking tick almost.
Mm-hmm. Mm-hmm.
It depends what's going on. More so in the open. I find the open to be different than the rest of the day. But let's assume I'm trading the open. I'm watching
Mm-hmm.
every single tick. I'm tracking like all sorts of stuff. There's things I use called reclaim, slip zones, completes, incompletes. I'm building context off price action on a 3-second chart and a 30-second chart. I'm watching the value zones on, the volume profile be built, and I'm with all that information. That's a shitload of information. The tape coming in. Was the order flow fast on this pivot versus the next test of the same price? Is the order flow slowing down? Is it speeding up when it's
Mm-hmm.
touched this zone 5 times? Because I'm building out a story. So I'm building out context. Every little pivot, chop, piece of order flow is a piece of contextual information. Doesn't mean I want to trade in that location, but that's telling me a story to let me know that if my next hand in a certain location is worth it. And that is a shitload of information to process.
And what's your average hold time for a trade?
Definitely less than a minute.
Okay.
Seconds. If you're saying
And then
average, but I'm not,
average.
yeah, it's in the seconds. Um, I'm trying to hit bigger hits, right? But at the same time, I'm trying to hit momentum. So I'm trying to track where momentum might be or where a high probability hand is. Lately I've been using a lot of poker analogy when it comes to my trade locations. Like the difference between if for instance, I mean, yeah, I don't want to go off topic, but yeah, it's seconds and it's mentally fatiguing. There's no fucking way I could sit here and do it all day. Now, am I trying to push that endurance out? Yeah, absolutely. But I can vouch for I'll get sloppy. Just sitting in front of a computer and being like sharp, like, and that's one thing I do want to talk about. I think a lot of fucking traders stop paying attention and then they just start clicking the button. And
Mm,
you have to have tremendous amounts of focus, right? That's what I think, and I just that's it's so finite. That focus is so finite. To
I agree.
to
It is finite, and that's why it's so important to find the right length of time for who you are as a person. Because for me, that short of a time frame just doesn't fit with who I am. And I think for the next person who's maybe watching your videos, learning about how to trade the ES in a momentum and scalp type of fashion, maybe 3 seconds isn't right for them. Maybe they need 3 minutes. Maybe that's what's right for them. And then there's yet another person who's listening to this who's like, guys, this is way too short. I feel more comfortable on a 30-minute time frame or a 3-hour time frame, but you wouldn't probably feel comfortable on a 3-hour hold time frame as your average hold time. That would probably push you way outside of your comfort zone. So that's why
No, yeah,
there's
yeah.
no right or wrong here. You have to find the one that's right for you, and that's, I guess, the main point is that just because someone's selling uh, trading course to educational course saying this is how to trade, that doesn't, that's how they trade. That doesn't mean that's how you have to learn how to trade. Find the time frame and the hold time that's right for who you are as a person, and stick to that. Is my advice.
Well, ultimately, you're going to become your own trader. Like your style, when you're matured as a trader or maturing as a trader, your style will be very unique to you. And I think there's an unlimited amount of ways to trade successfully. I think a lot of all the data and information you're looking at, whether it's a time frame, an indicator, all that bullshit, that is you trying to take a foreign language and all your indicators, charts, order flow, that's literally like a translator, like the Rosetta Stone or whatever for the hieroglyphics, you know what I mean?
Yeah,
All that information is you're reading these charts and order flow and all you're doing is translating it into English. And
yeah, or whatever your brain thinks, and yeah,
or it's like martial arts. It could be so many different styles, or even like skateboarding started off as a style, and now there's so many different ways to do it. I just I mean, it's at some point you're going to take things from other traders, maybe if you're studying other traders, and
Absolutely. Absolutely.
I'm a mix of other traders as well, but I'm also very uniquely me. You're doing something I've never seen before.
Yeah, and I would say that I'm the same. I pull what I need from other people's styles that I've seen, and I leave what doesn't fit to mine. It actually it's a nice segue into the next topic that I wanted to talk about, which is frequency of trading. You place sometimes over a dozen trades in a day, right? That's not unheard of for you to place 10 trades in a day.
Oh, more than that. You're
Sure.
looking at the 30, it can be 30 to 40, but also I can get in trouble and start over trading. That's part of why I like shit, dude. 30 minutes in the open, like I don't really push it past an hour, whether I trade the afternoon or the morning. After that first, especially the first 30 minutes, after that I'm
Hmm.
out. I've already took so many trades, and the thing is I need to review all that. And when I have
Right, right.
50 fucking trades or 40 trades, I'm here for 3 hours, and then I start to get more trouble.
Hmm.
And also, it's for me, it's I think you can make good money off of just trading an hour. To be honest with you,
Yeah.
you don't need to be here all day because you're gonna fuck yourself. But
And you don't need to make 50 trades. I typically trade between one to maybe three trades a day max. And I'm finding success with that amount of trades per day. You don't need to place 100 trades, but it again, just like the time frame and hold time topic we covered, it's kind of up to what feels right for you. If you feel like you need to be in and out and in and out, and that's who you are as a person, then you probably will be placing dozens or hundreds of trades, executions a day. But that doesn't mean that the next person needs to. If you feel like you should only be placing one trade a day or less, then listen to that part of yourself. Maybe you should be doing one trade a week or a month.
yeah,
I mean, it's really up to who you are. Listen to that frequency that your body is telling you feels right. And if 100 trades a day doesn't feel right, then find what does and go with that. And that actually brings us nicely into the next topic, which is what even instrument to trade, because there's so many. You only trade the ES. You've looked at other products, but you don't really trade them. You traded options for a little bit in the ES or in the SPY, I think it was, but you really stick to
SPX.
the ES. You've
Yeah.
become a master of one discipline. I trade mostly just large cap equities. I don't really trade small caps. I will sometimes if there's fresh news in them, but I don't really trade them day in and out. I trade the large cap stocks, the big names that you probably have in your household, their products. I don't really trade penny stocks, but some people like to trade bonds. Some people like to trade NQ. You got to find what where do your interests lie? Do you want to be trading world geopolitical products that are affected by things happening around the world? Do you want to trade commodities? Do you want to be trading um, things that are bought and sold in stores? Do you want to be trading large cap stocks like I do, or penny stocks? That's something that people have to. How did you come to choosing the ES, by the way? Why did you settle on the ES?
Um, that was the
Like, why
first.
not anything else?
That was the first thing I ever traded. So, like I was learning through a stock YouTube channel many years ago, and then I joined their trading room, and then they were trading ES, so I made a demo account with ES, and I just stuck to it. Learned a little bit about futures, and then eventually I did do bonds for a while, but it was too slow. And the way I
Hmm.
learned to trade bonds, you use ES as inverse correlation because they would inversely move.
So the pace of the bonds didn't fit your personality. Can you
Ah,
talk about
man,
that?
it just, I mean, yeah, it just didn't move. It wasn't
Hmm.
exciting, I guess. That's probably the wrong reasons to be trading is for excitement, but yeah, I switched to ES because the bonds just didn't fucking move, man. You had a very brief moment of movement, but man, trading bonds is like watching paint dry at the time, and ES actually fucking moved. And when it come And at the time, I was using just a DOM. I didn't even use charts. So like, it was nice to see the numbers actually flowing in and out. I don't know, man. I couldn't tell you. I just stuck with it. I mean, it's one of the most high volume products, and the liquidity, well, I mean, it's getting shittier over the years, but well, since COVID, but it's liquid, it moves, but I don't know, it's kind of like Little Red Riding Hood, you know?
The
Uh,
perfect,
yeah,
the
it's
perfect one.
yeah, it's like NQ's too thin and fast, Bonds is too
Hmm.
slow and thick, man. And you're playing a different client in the bonds. You're dealing with a lot of fucking banks and shit. Whereas the
Yeah.
ES, it seems there's more retail guys in there as well. I don't know. It just, and for me, I just stuck with it. I mean, I've tried to look at other things like crude. I've tried several times to fuck with the NASDAQ. I don't fucking like it because at this point, I don't even know how to read the order flow in those markets.
Hmm.
Like, I
Hmm.
have an edge that doesn't seem to work in these other markets. So I kind of am trapped with the ES, and also I know that I can get better at it. Like I know I can extract a lot more money and get more efficient with it because I'm still developing. So and there's a
You're
lot.
mastering the ES as one product. Your attention isn't being divided across multiple
Yeah, there's no
products.
point for me, in my opinion, there's no point to go into other products if I am not trading the ES at the highest efficient you know what I mean? Until I hit a
Yeah.
point where I'm not scalable anymore, because I'm trading too much size, then I will start
Then you'll go to bonds.
something else. Yeah.
So
Uh,
I think the takeaway for folks listening is like, what pace does your gut feel like you should be following? Because if you like the pace of bonds and that makes sense to you and you want to be trading that type of order flow and that type of pace, then bonds would make sense. If you think that ES is too slow, then go look at NQ or crude or gold. If you feel like you need to be involved, not on the future side, but on the equity side, small cap stocks can really move.
I think the
Um,
volatility in the NQ is an optical illusion, to be honest with you, because it does that in the ES as well.
mm,
I think people are like, oh shit, it moves and it moves a lot, but honestly, I think it's kind of all bullshit. Because there can be times where there's nothing there. I just
it's
wanted to
thinner
throw
for
that.
sure. It's
Well,
it's
yeah,
thinner.
but they're fooled by the volatility, thinking, oh, it moves, so therefore there's opportunity, and I think that's not necessarily true. But that's just sort of a side note on that.
We're gonna get to. I think that comes into risk, and we're gonna get to risk in a little bit. But moving along here, the next one I have that I wanted to talk to you about was there's a scale of what works versus what looks beautiful, what feeds the ego, like what looks sexy. So I think people need to ask themselves, are you okay with non-sexy trade ideas that are still profitable, or do you need to be that person who needs to catch a huge run and catch the top and bottom tick on both sides in order to be satisfied? And where do you fit on that scale? For me, I found an edge that is not capturing the top and bottom tick, but I can catch the meat and repeat that over and over, and it's scalable. And for me, that is enough. But that might not be enough for you listening. And for you, Fat Cat, I think you're kind of both because you are trying to push yourself to catch larger runs, but you're also catching the momentum uh, uh, drives. So it's not like you're catching the full run. You're taking your piece out and walking away. You're taking your piece out and walking away because it works. It's profitable.
Oh yeah,
Um,
especially these days.
so I think people need to figure out like because some people don't want to be even involved in trades where they're not capturing a huge run. That's like some kind of personality conflict they have where they need to be the person who can, post a picture of their trade saying that I caught this all the way up to here or down to here. and that's something they're going to have to deal with. So I think you have to figure out, are you someone who needs to be catching the entire move, a piece of the move? Are you okay with
I
as
think
long
there's
as
a
it's
problem with
profitable?
that though. I think there's a problem with needing the being satisfied with actually catching these moves because for the longest time I wasn't satisfied with scalping, but that's where I make money. You know what I mean?
Hmm.
I think
Yeah.
it's where are you actually making money? And I don't think it has anything to do with satisfaction as far as, ooh, I got to get that big home run because sometimes that doesn't exist. Like we're in a market.
In a lot of market regimes, that doesn't exist. That's
Yeah,
right.
not right now. I mean, I'm looking at Twitter and everything, and a lot of people are getting fucked up. They cannot because it's so excruciatingly choppy, at least the ES, and it's well, okay. Well, now that's where the scalping works. Now I think my satisfaction has switched to my performance. I
Mm-hmm.
could have a big day, but if it was like there was sloppy trading in there, I'm not satisfied. If I handled the
Mm-hmm.
day perfectly and hit exactly where I should have on every trade and did exactly what I was supposed to, then I'm satisfied, and then the money just takes care of itself at that point. I think satisfaction of is more so for performance for me at this point, but I think being you need the satisfaction of home runs. Honestly, where do you make money consistently, man? Because that's again, I'm telling you, I've had an identity crisis for years, and then it's finally it's like, okay, just lay the fuck down, fat cat. This is what you're good at.
Mm.
Just do that. So,
Yeah, I think it's wise to have judge your success based on the goals that you set and your ability to achieve them rather than something that's kind of out of your control. Like, if you're judging yourself by metrics that are out of your control, how are you actually improving? Versus if you are judging yourself based on, did you follow your plan? Did you take the trade when it appeared? Did you stop yourself out when you should have? That kind of thing. Things that are choices, decisions.
yeah.
I think that's where the real growth happens. So that's a good point.
I mean, P&L is just a reflection of all the skills you're developing. Like, are you able to be patient? Are you able to wait? Are you able to execute right when you need to? Are you able to manage it even? Are you able not to get tilt when the trade's not running? There was a point where I was getting tilted,
Mm,
and this happened last week. I had a trade run and I was up 6,600 bucks and it came all the way back and I took $100 loss on it, and I was very upset. But at that moment in time, I told myself, um, "This is good because now that we're experiencing this emotion, now is the time to push through it and perform and
mm.
overcome it." So, um, yeah. Anyways, go ahead.
I think the next thing, and again, this is all still for like how to identify what kind of pattern you can actually find, recognize, and then start to exploit an edge on, is understanding what your own risk appetite is. And I think this really comes down to, do you need to be right often, or do you need to be right in a big way? And you can't always have both. So side notes on that are also, if it didn't work the first time, are you able to retry as a person? And are you as a person discouraged by multiple failed attempts that happen in a row? These things all kind of come into like your risk appetite. So I know you will try things a couple of times, and your win percentage on a good month is in the 40s, on an average month is in the 30s, but you're also right in a big way. Your risk reward is often multiple times of your, um, or sorry, your reward is often multiple times of your risk. So you found that personal balance for your risk appetite. So maybe you can talk about how you came to finding that. How did you know that you were okay with not being right a lot, but you needed to be right big?
Well, the losses are actually relatively small.
Mm,
So even though like you're like, oof, a 33% win rate or whatever. Yeah, but that's like a lot of those losses could be one, two, three ticks.
Mm-hmm.
that when I'm hitting it, it can go multiples of points. And then and one thing that I've done that's helped substantially is trading larger size on the most high probability setups,
Mm-hmm.
which you and I have been talking about, and that's made a massive fucking difference. Uh, Sizing up your A plus setups. But that's the thing, man. If you don't know what your A plus setups are, you can't be doing that.
Right. Right.
But I don't I
That's definitely after you found your edge. You should be
Yeah,
sizing up on those, not before you find your edge.
but I also don't like taking on risk. For me, I just can't sit there and let the trade go against me because it hurts. Like, I need to get in as precise as possible, and I've obsessed over that
Mm-hmm.
in an unhealthy way for 6 years now. Now I can actually do it, which it wasn't easy, but I mean, now it's to the point where for me, that entry needs to be precise and it needs to work relatively right away. And that's where it's like, okay, you are a scalper because you are fast.
Mm-hmm.
So, I
Mm-hmm.
mean, there's an internal timer going off, and it's like, this is not going to work. Something might happen and it's going to fail. And, you know, and that's the thing. My journaling software counts break evens as a loss, which I don't, but I see why. So I would say my win rate might be a little better, but there's a lot of break evens in there as well. But I wouldn't say I'm right in a massive way. It's just like when I'm right, even if I don't scale up size, like I'm not looking to scrounge out 2, 3, 4 tick wins. I'm looking for
Mm-hmm.
several points. So I have to hit areas. Yes, I could trade in all sorts of fucked up areas that don't offer this RR, but it's for me it's important to hit areas that do potentially offer somewhat of a run. And I there is an element of luck in trading, and if that run can continue and that momentum and pacing on the tape stays there, well then that's where the home run might pan out. And
Mm-hmm.
I know at this point I'm so desensitized that most trades are going to only be a few ticks of a win. And even then I'll might struggle. I could get into a session and the first 5 trades might be a 1, 2, 3 tick win, one after another. But that starts to build up capital as well. And also, I do like to start off the session most of the time cash flowing and then
Mm-hmm. Mm-hmm.
building up profits. And then also, if I do take a stop or some sort of loss, depending on how big it is, it's very important that if I do get into a run, instead of seeing if it has that extra oomph to it, it might make more sense to get out of it to pay for that loss and then
Sure.
some. So, I mean, that's a lot of management. I could go on
That's like
forever.
trade
Yeah,
management,
yeah,
account
yeah, yeah.
management, risk management. Yeah, that's all good stuff too. I think it's interesting because you found success using that risk methodology, and then also for me, just who I am as a person, I need to be right very frequently.
I think you're right
So,
though, dude. I do want to say you're right, and the fact is, what do you want to do?
mm,
Maybe I could have been better at trading something else, to be honest with you, but I wanted to trade ES, and I obsessed over being precise, being super precise. So now I'm good at it, but that required a shitload of work. So I'm just kind of like, backtracking, going, at first I'm like, well, you should trade what you're good at or your talents and not necessarily what you feel you should be doing. But now that you mention it, I mean, if you just, and that, I guess if there's something you obsessively want, if you do relentlessly go at it, you'll get better at it. But
you'll get better at it.
yeah,
Yeah. And plus,
yeah.
if you don't have that experience of already being good at it, I mean, that's why the folks are probably listening to this is they're trying to figure out how to get to that place in the first place, and all they have is the things that interest them or the things that they feel in their gut is they're being pointed at. Like they just naturally feel like I need to be right a lot, or I need to be right big, or I need to trade the ES, or I need to trade the
Yeah,
NQ.
chase the
They
passion.
chase the passion, because
Yeah.
that's what's actually going to get. If you don't have it, you're going to be not here for a long time.
But there is a
And
point that you need to do what you're good at. There will come that time when you're newer. Yeah, you need to chase what you want to trade or whatever. But you should also sample other things. But I definitely think there is a point where you need to do what you're good at.
yes,
I could
yeah,
I could not want to be a scalper as much as I want, and I will not perform as good.
right. You'll just get squeezed out because it's a cutthroat marketplace, and you're competing against people who are extremely good at what they're doing, and they are out there to take your money. So if you don't actually leverage your own strengths, so you mentioned, your fast, your speed, your ability to focus, your ability to read the order flow on a specific product, your ability to see and build context on a specific product, but not in other products. That's I think what we're talking about in terms of focusing in on that. If it's already a strength of yours, if you can already derive some kind of edge from it, lean into that. Go there. Um,
And the learning never stops. I'm learning, like, when you're new, right? It's a lot of information and shit, and you're learning so much. I don't think the learning ever plateaus, and if it does, there's a problem. You're gonna have problems. But
I agree with that.
I'm learning so fucking much.
Even the folks who retire after 40, 50-year careers are saying they were still learning up until the end. So even if you read like Jack Schwager's Market Wizards books, the guys who are at the end of their careers are still saying, still learning every day. So absolutely agree to that. And for me, I found that I need to be right a lot. I need to be able to come in and day out and have winners. And so for me, I enjoy a very high win rate, but a lower risk reward rate. I don't have the 4-to-1, 5-to-1, 10-to-1s that often you are putting up on a daily basis. That's just not how I work. That's not how my brain works. That's not what I need. But I also enjoy a high win rate. And I am trying to stretch myself and learn how to be um, learn how to expand and grow and catch those longer runs so that I can enjoy that higher risk reward rate. And that's something that I'm actively working on to be able to expand my trading and get even more, squeeze even more out of it. So I think, to sum that up, you got to figure out who you are and what feels right for you, and then explore that. And then moving on, I think this might be the juice of it right here, the pattern identification part. You'd basically use your answers to everything we just talked about over, I don't know how long we've been chatting, but over the
37 minutes.
30, you use everything that you've answered to the last 37 minutes about what kind of time frame you are interested in, what kind of security type are you interested in. Is it just the ES? Is it large cap stocks, small caps, pennies, crude? What kind of time frame you want to hold on? Do you want to hold on for 5 seconds, 5 minutes, 5 hours, 5 weeks? What kind of risk methodology do you want? Do you need to be right in a big way, or do you need to be right a lot, or some kind of mix in between those? And you take the answers to all of that and you put it together, and then now you have a narrowed down focus area, and then you sit and watch that, and not for days, not for hours, but for months and years, and you take notes on the repeating patterns you see play out in that narrowed down focus area. And you got to take notes on what the overall market's doing during that time. You have to take note on what that specific product is doing during those times. You have to look at outlier events, like what we had a bunch of news this week with PPI and CPI, and you have to take all of those market conditions into account and take notes on all the various patterns you see playing out. And what you'll start seeing is that some of them repeat, and you'll start to link those together. And you'll be like, hey, I've seen this before. This has happened before in this product for my time frame, for my risk methodology, for my specific security, and for what I'm looking at. I've seen this before.
Well, that's why
And that's the
That's why you got to review your fucking footage. Go ahead.
Yeah, that
Yeah, yeah.
record your screen. Absolutely, recording your screen so imperative. And I think you've talked about this on a number of your videos, both recently and in the past, of the importance of recording your screen and reviewing your footage, because it is a game changer. If you're not doing that and you're starting out, you're slowing down your progress. And I'd even question how serious you are about it if you're not recording your screen and reviewing your footage. It is probably one of the most effective ways of improvement, is recording your screen with audio, with yourself talking to yourself, and reviewing that after you're out of the heat of battle to see what happened. But you take all those patterns and the notes on the patterns that you see play out over those months and years, and you start linking them together, and then you start to notice the nuances of those. And there's going to be dozens and hundreds of nuances just with my bread and butter play, which is an opening drive continuation either to the upside or downside. There's so many nuances, and I've learned after painful mistakes and failed attempts at playing it what those nuances are, and I still am learning. It's not like I have an exhaustive understanding of every single nuance. As the market regime changes, the nuances change as well, and you have to track those. It's never going to be some static thing that's always going to work. That just does not exist. There isn't going to be a set it and forget it and go to the beach. You're going to have to constantly be reviewing and understanding where we are in terms of narrative and market context, and the nuances in your specific product and your methodology and time frame and risk type and all of that together. And then when you start combining all of that, after months and months and years of watching and taking note of all the nuances and reviewing your trading, you will start to see patterns come out that you will be able to brainstorm your own ways to exploit. So that could mean, for example, from my end, I saw that on fresh news. Let's just consider the long side as an example. If something's exploding through its pre-market highs with fresh positive news and clearing out long-term time frame levels on the daily chart and just blowing through them on high volume and has a specific volume profile structure on that breakout, I've learned the nuances of how that behaves and the likelihood of retracements, where those retracements could come into, and it's given me an ability to enter into those with surgical precision. And that's the edge I'm exploiting for that particular setup. And so that can only happen if you answer all the questions as to what kind of security you want to be looking at, what time frame makes sense for you, what risk makes sense for you, what kind of methodology makes sense for you, and then you sit down, put in the seat time, reviewing your footage every single day, just lots of time, taking notes on those repeating patterns you see playing out, and taking notes on what the market context is, because we are no longer in 2021. The market context is much different today than it was a year ago or even 6 months ago. This is a different market, and it's going to be a different market tomorrow and in a few months again. And you just have to be able to ride that wave. There is no, oh, I figured it out and now it's going to work forever. You have to be able to surf the wave.
I would say some setups completely go away when the market does shift, but I do have a bag of tricks and techniques. Techniques, I would say, not necessarily setups. Well, yeah, setups too, but like there's a lot of techniques that have been working continuously, but it's just there's so much nuance to it. Like you said, people generally want like black and white answers, and trading is very much gray. Um,
Yes,
there's a video I have called Scooping, which is a lot older, and
I've seen that. Yeah,
yeah,
it's
there's
a
a
good one.
technique in there that I would talk about, and then I no longer call it scooping, I call it something else, but it's more so the reclaim or a slip. They're both kind of the same technique, but that one little thing that I identified years ago has steadily evolved into something that I'm super confident in and I can leverage to get a free peek. And what do I mean by that? A free peek is when I get into a trade and it works immediately. And that's generally what I'm hunting for, is somewhere where it works right away. But it's taking me hundreds of hours to further refine that. And that's
Mhm.
what I tell traders is there's no fucking way you're going to pull this off in a year, not even 2 years to be honest with you, that you've got to see your setup work in multiple environments, and then when it stops working, because you had problems this summer with one of your setups not working because you were a one trick pony
My
going,
bread and butter.
yeah,
Yeah, my
and
bread and
that
butter setup
and
was
I
not working this
and I'm
summer.
like, well, now you gotta have to figure something out. And that's also what's really frustrating about trading is once if you have one setup and that's it, it's gonna stop working. Maybe not entirely, but something may happen. And then you gotta have to relearn something like a new trader all over again. And some people just can't mentally fucking handle that. But the thing is, every time these market regimes shift, these environments shift, well, now's the time you're going to have to learn something. What else you got going on? You know, some people decide to sit out completely, which I don't think you should. Now, if you need to do it to take a mental break, whatever. But some people decide to just sit the fuck out forever until their setup comes back, and that may never happen again.
It's good,
So,
good discipline for
you,
those who can do that. Yeah.
you're going to have to fucking learn something new. And then over time, your 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 tool belt or your bag of tricks is getting bigger and bigger, and now you'll have multiple things you can lean on to gain edge from, and then you can leverage multiple things at once, or when one stops working you can rely on this other one, or when you might have something in slower environments that work really well, and then when it's very high volatility you can shift. So you had to relearn, you had to learn
Yeah,
a
I
setup, but what is it? Is it just real quick? Is it a variation of what you're doing now, your original setup?
not exactly, no. And I
How'd you
wanted
find the
to
new one? Oh, go ahead.
uh,
Sorry.
yeah, the summer was very painful. I was red in June. It was my first month red. Since trading this bread and butter setup, the opening drive continuation play, and then I was red in July again, and I just started feeling. You used the word identity crisis earlier in the chat here, and I just felt like, what am I doing? Why is this just not working anymore? Do I even know what I'm doing? I feel completely lost. I don't know where to turn. We spoke about it a couple times, and then I just kind of just looked at my wife and said, I don't really know what I'm doing. And she looked at me back and said, you've been saying for months leading up into summer that summer is going to suck and it's going to be low volume and that you should probably reduce your trading. And now summer came, it sucks and it's low volume and you're losing money and you should probably stop trading for the summer. And at that point, that was beginning of August, and I was like, you know what? I'm burned out. I've just took 2 red months. I'm gonna just take the rest of August off and relax. All the professionals who actually make my setup work, because I understand what my edge is, all those professionals, they're away at the Hamptons right now with their families and they're not trading, they're resting. And so I took the rest of August off, and man, it cleared my mind. And I came back in September, and my trade still wasn't back. But I had taken the time off to reset mentally. And I all of a sudden started seeing there's another equities trader that I chat with on Discord, and this is his main bread and butter play. And so I started picking his brain about it, and it's basically a reversion trade, which I did not have in my bag of tricks. And I started looking at what he was doing, and what I started noticing was not only did I recognize the pattern that he was using, but I saw the things from my bread and butter trade that were showing up inside of there. So despite my bread and butter trade being a momentum continuation, a drive type of play, a directional play, and this being a reversion play, I still saw elements of that, especially in the volume profile and the footprint
Yeah,
pieces.
that's what I
I
was
saw,
asking you, man. Did there was
yeah,
certain techniques or elements of a different setup that you are kind of using to
yes,
build
yes, yes.
context on the new setup?
Yeah,
Yeah.
yeah. So there were elements that were showing up, and I was like, hey, this looks like a familiar friend, but it's not the same friend that I had all year, but it looks like a familiar friend, a distant or maybe not so distant cousin. And so I started watching those, and then I started combining it again, the importance of market context, higher time frame context for me and my trading and for who I am is very important. I know it is for you too. Not everybody uses market context and higher time frame context and narrative market sentiment, but I rely on it heavily to build a narrative for the day and for intraday. And so then I started combining that with what type of day type does it look like we're setting up in? Is it a good chance for reversions to happen today? Here's some really nice levels on a higher time frame. Ooh, let me see what's happening here. Boom, footprint and the volume profile start lining up. And all of a sudden, I'm like, I got to put this trade on. This is a reversion trade. It's not my bread and butter, but I got to put this on. I started putting it on, and I will tell you, Fat Cat, I think I only traded my bread and butter momentum continuation setup once or twice in September. I traded this reversion setup every other day, and I had just an amazing September.
Do you
It was
think?
all this other setup.
Well, do you think? Well, here's the problem: is because sometimes when you figure out a new setup, you start to ignore the other one, and then you
Mm.
get tunnel vision. Do you feel that might be the case, or how did you?
I think that happened a little bit. I started being like, "Oh, every day's a reversion day," but I think that's more about reading the market context correctly. When we broke, what was it? Not Friday, not yesterday, but Thursday. So this would be what, Thursday, October 13th, 2022.
CPI?
CPI numbers, and we broke through multi-week range support on the ES and started cracking. That was that break meant something. And then it happened in pre-market, I believe, and then we just drove back up through there and recovered so much after that open. I mean, that type of market context and narrative says so much about where we're at. I forgot the question I was supposed to be answering here. You said, am I having tunnel vision on my
Yeah,
prior?
so you found this new reversion setup. And what I notice is when I find a new setup or whatever, I start to ignore the other ones and I'm tunnel vision on that new setup. And then,
So I would say at first I did. I started just thinking everything was a reversion trade, but then after I got slapped a couple times when we did have actual momentum drives, I was like, wait a minute, this is still my bread and butter. Now I have another bag of tricks in my pocket, and or another trick in my bag, I should say. And then I was able to find the balance and really trust myself to distinguish between the day types. And just the other day, I used my bread and butter trade. Actually, it was on the open in pre-market during the CPI numbers. Really nice reaction trade based off the same idea of my bread and butter. So I found the balance now, I guess I can say. And now it's much better. I also realized that I need to trust myself more as I'm getting better and better and learning more and more, learning from my mistakes, reviewing my footage. I think I have developed even more nuanced setups. So now it's not just a two setup thing, but I would say I have maybe 3 to 5 now, and I can switch between them as needed depending on the day type. And I think it's going to continue to grow as I continue to mature. And
it's a snowball, man. It's the little snowball
yeah,
that's rolling down the mountain. Then it becomes this giant fucking snow boulder almost. So,
speaking of, it's totally snowing up here.
yeah, man, that's nuts.
Anyways, so I don't know if this is a good stopping point, but I hope that some of the things that we discussed here help people be able to get to that spot where they can start to find their pattern and start to build off their own trade ideas and strategy and setup and edge from who they are rather than what they saw online or bought from a course. Um, and I understand the irony of this video being online on YouTube, but this isn't a preaching of a specific type of trading or setup
Yeah, because
because
you and
the
I
way I
trade vastly different.
completely different. And the irony is I steal stuff from your methodology all the time.
You
I
stealing from me?
borrow, yeah. I, I I borrow, like I listen to Fat Cat go over his trade reviews. And, I don't trade ES. I don't even trade futures. I trade stocks in completely different manner than Fat Cat trades. Like there's almost nothing the same between the way that we trade, but I still listen to him go over because he's has a very good way of, I'm talking about you in the third person, but you have a very good way of explaining things, and I just start to pick up little nuggets of wisdom, especially around the context of the overall market, and I bring that over into my trading as needed. I apply it the way that I need to through my own filter, through my own glasses, and that's been really helpful too. Again, especially around the market context and how you read long-term volume profiles are some spots that I specifically have borrowed from your techniques and brought in. And again, I don't trade futures, but I have the ES on a long-term volume profile up, and I look at it every day now because a lot of the things Fat Cat's talking about are if you can actually absorb it and understand the root of what's going on there, it helps me a lot, and it helps me be more surgical and understand what type of day type we're heading into, which helps me figure out what type of approach I should be having, which helps me figure out what type of patterns I should be looking for on the open and so forth. So I guess that what I'm saying is thank you, man.
Yeah, man. And that's the thing is well, you're also an auction market theory guy, and I think there's a lot to be said there, um, because it is an auction, and when you're using footprints and profiles and shit, that's so there's a lot of similarities there because everything kind of cycles from value to out of value. But one thing you mentioned is the how you listen to me talk, and we don't even talk like you're not taking my strategy. I mean, you hear me
No,
talking strategy and techniques,
nope.
but what's interesting is you can at some point you'll start to listen to other traders who will share little things that have nothing to do with an actual setup
Mm-hmm.
or strategy, and that one little piece of information can really pivot you ever so slightly on your trading journey. And that's the thing, man.
Yeah.
I think a lot of traders are trying to find the holy grail, the big life changing system or whatever. But the thing is,
Indicator.
yeah, sometimes you can listen to something for an hour, 2 hours, buy a course for $1,000 or whatever, and all you get is this little tiny piece of information. And some people aren't
Mm-hmm.
super satisfied with that. But the thing is, it's like an airplane. If you turn the airplane 1 degree to the left and 2,000 miles, you're somewhere completely different. So I think I've mentioned that before, but just a little piece of information, and that's how my trading growth has been. There have been these moments, but a lot of my trading has been these really small things that it's like, oh, that's very interesting, and
Mm-hmm.
just constantly finding that little small thing, and it pivots you and then you end up somewhere completely different. I don't know, man, but that's the thing. You can definitely I don't know what the fuck I'm saying, but I do want to just real quick wrap it up on finding your pattern since that's sort of the subject of the video.
Mm.
Um, you need a fuckload of experience. I just don't.
Yeah.
There's
You got to put
no.
the seat time in.
It doesn't
There's no
matter.
alternative.
Frozen
Yeah.
can give you something on a silver platter, and I could give you something on a silver platter, and there's a lot of traders that know exactly what the fuck I'm doing, but they
And it
can't.
won't
They
work.
can't. They
Yep.
can't make it work.
Why?
Obviously,
Because their risk appetite is different, their discipline is different, their time frame for who they are as a person is different, their ability to focus is different. It's so important to go for who you are and not try to copy exactly what someone else is doing.
well, that's like me telling you how to hit the fucking baseball. You know, oh, here's a fucking curveball. Here's how you fucking hit it, and I'm sitting there zinging them.
Mm-hmm.
I can break that motherfucker down, but until you have the muscle memory, the mechanics, the focus, the right psychology, and you've practiced hitting that yourself hundreds, if not thousands of times, you won't be able to do it. And it's very important to record and review your session. Really, the edge is going to come after the trading session. Like
Yeah.
the work you do outside of the actual session where you analyze what you fucking did.
That's where the gains are had. Absolutely.
That's the secret sauce, I guess, but you're not shortcutting. You can't shortcut it, man. There's no fucking way. This is a high level sport. This is a game of skill and all these indicators or whatever that, I mean, sure they could work and you might buy into it and you're like, "Oh, this is bullshit." And it could be bullshit, but if the trader that is selling it does actually have real success, how many fucking hours does that guy have using that? And there's just so much granular nuance because, like, I would say every trade is different and unique. There's a lot of similarities, right? You have a setup that has this common general similarity, but every setup, every time you trade that setup, it is so unique and slightly different from the last one. It is literally
100%.
it's like a fingerprint. They're all slightly different. So um, until you've experienced a fuckload of it, uh, I mean, and that's what you got to do. You just got to see it over and over and over. How does it work in slow? How does it work in fast? How does it work in this type of environment? And when it works really well and you figure out something quickly, you're going to get fucked because the market regime always shifts. And that's
Yep.
okay. That's okay because now you have this bag of tricks and you will continue to master it. Maybe it goes away completely, but in the end, you're going to have to learn something new. And then because that's the beauty of when your edge stops working, like what happened to you this summer, is now you have to learn something new. Because
Yeah.
I didn't like you being a one-trick pony, and now you have, seems like you got more than two things in the pipelines
Yeah,
at this
definitely.
point. And now you're spiderwebbing and expanding, and that's just how you become, I guess, a professional. And I wouldn't at all consider myself a professional because I'm not satisfied with my trading. I just think I could be a lot better. And I think it's important to constantly be striving to perform better. At least that's how
Always
I feel
struggle.
about it. I don't, because once you're like, "Oh, I'm making money," and you just do this easy, repeatable thing, well, you're never gonna be one of the seven-figure traders. Like, I'm not a seven-figure trader.
Nor is that going to
Yeah,
last.
man. And
That's just not going to last.
dude,
The
I've
market will
struggled
change.
so hard to make a $10,000 trade, and I can't fucking do it. I get close, but I can't fucking do it. I mean, I will at some point, but man, and then once I hit that point, it's like,
It'll be easy. Not easy. It'll be common, is what it'll be.
yeah, man, I
After you.
remember struggling to make $100 and then
Yep.
1,000, and now it's like the 10, and now it's like the constantly want, and it's not to make all this money. It's like, what's that fucking play feel like and look like? How am I hitting that fucking ball to make that work?
Yep.
So, I mean, I think when it comes to finding your pattern, you just got to stare at the motherfucker, record, review the footage, and honestly, a lot of my patterns, nobody taught me. It's just from staring at the fucking shit forever. That's how
Right.
I
That's
read it.
that's
Yeah.
the only way you can actually make it your own. That's really it. There's no other way to. You can't make someone else's thing your own unless you put in the work and make it your own because you were the one who quote unquote discovered it or observed it enough times to be able to say, hey, I see this, this is happening, how do I take advantage of this? And also, I think this is important, noting when that pattern fails and what led to or contributed to the failure of it after you found one that repeats itself. I think that's also important, because what that's helped me do is avoid, I said earlier I like to be right a lot. Making notes of when the pattern fails or it doesn't work out, and the characteristics of what's happening around that when it fails has kept me out of a lot of trouble. So
Yeah.
I'll add that too.
And when the pattern fails, you'll feel like shit and stuff. But at some point, I think it's important.
It goes away.
It's good because, like, I'll have bad days still, and that's when I learn the most. I remember one day that was pretty bad. That's when I learned the most, and that's when I have these life-changing opportunity. Like, it just like changes my trading completely. Like, you do need this shit to fail on you. It's great when it
Oh yeah.
works all the time, but you do need to understand why it's failing. And then, because when people have bad days, they just fucking quit. Those are the most important days where you need to really pay attention to
Yep.
what's
I'll
going
end it
on.
with a quote. Failure is a condiment that gives success its flavor.
There you go. Well, experience is what you get when you didn't get what you wanted. There's another quote. So we'll cut it off here.
Thank you, Fat Cat. It's
Yeah, well,
always
I
a
mean,
pleasure.
really, this was your thing. But yeah, we'll see you guys in the next episode. So later.
Bye.